Some could say that everything one person does in life is tied to the price of a GPU. And that's why we talk about it so much here at Tech Yes City. If the prices are going to go down, well then you should save your money and wait for those prices to go down. If prices are going to go up, then perhaps it's better to buy right now,
today,
and don't wait. So let's play a quick clip of a video that we made 4 months ago predicting that prices would continue to come down.
Absurd amounts of money for an RTX 4090 or an RTX 4080, and AMD doing the same with the 7900 XTX, and then CPU prices getting out of hand. And here's where ultimately, if I look into these numbers and I see what's going on, money's becoming smarter. So when money contracts, it becomes smarter. That means consumers make more smart purchasing decisions. They're looking for better value for money because that money's harder to get. And so this means that they're going to be buying the best value products going forward. So if companies like AMD, Nvidia, and Intel are not offering the end user good value, then they're going to lose sales.
Since making that video, there are some really important changes that are taking place that could spell good or bad news, especially for a GPU price. And I actually think more importantly, a CPU price where there's actually, believe it or not, a lot more margins on CPUs than there are GPUs. But we'll talk about that, the good news and the bad news, right after today's video sponsor.
Never pay full price for Windows 10 or 11 again. With today's video sponsor, SCD Keys, you can get activated for as little as $15 using that coupon BFTYC. Links in the description below.
So let's get on straight into the good news here, and that is the DXY, or the US dollar index, has actually dropped significantly in the last week, meaning that if you live outside of the US, prices of GPUs and CPUs will continue to come down, all other things considered equal. However, this could be bad news, of course, if you're in the US itself, but you may be wondering why this is and why could the US dollar continue to come down. This is, maybe some people are wondering this. They maybe read reports of, hey, the US dollar, I heard it was just going to keep going up indefinitely. And this is where it's got to actually, I believe, I'm going to throw my 2 cents in here with this video. And before we get on with this, any of this economic news, any predictions, this is not financial advice, so take it as a grain of salt and do your own research. But basically, when it comes down to currencies, there's a big thing in currencies called the carry trade. So people will load up and they'll borrow cheap currencies, like for instance, the Japanese yen. They'll go borrow that, hedge funds, international insurance funds and whatnot, and then they'll go and buy currencies like the US dollar that have a higher interest rate, and they'll also do that with a thing called margin loans, meaning they'll have, say, $1 million. This is just a basic example. They have a lot more than that in reality. But then they'll go use that $1 million and make $2 million or even $4 million. And then they'll cut the interest rate differential on that trade, which will then boost that interest rate from 5% or 5.25% if they're getting a pure difference between the yen and the US dollar. That'll then go up to over 20% if they're using 4-to-1 leverage. That's fantastic returns if you are that particular person taking that trade. Now, here's where it gets a little bit tricky because a lot of this trade has to do with forward outlook. And recently in the US, the CPI has come plummeting down too, especially, and this has got a big talking point, which will segue into the next topic of this video, especially the all items, which includes things like TVs, electronics, even fridges and washing machines. They put this in the all items. However, looking at these numbers more closely, there's some big discrepancies here. First of all, food as a generalized category is 5.7%. That's higher than the 3%. But then if we look below that, all items less food and energy is higher than the 3% too. So that 3% is being weighed down and becoming lower due to food and energy. But electricity and food are higher. So if we look below that, we've got categories, singular categories, that are heavily weighing this number down, meaning they want inflation to appear much lower than it actually is. So after seeing these numbers, I'm convinced that the stuff that people actually need is higher than 3%. So we'll actually take this 4.8% throughout the rest of this video and use that more as a reference base. However, we'll get into this soon, I promise. Let's get back to that 3%, or in this case, PCE inflation rate, which in this case, it was 3.2%, and it's traveling closer to that 3% than that 4.8% that we saw before. This number is a very significant number that the Federal Reserve uses to base their decisions on interest rates, or the funds rate. And that number in turn determines the amount of spread that international borrowers can get on that carry trade. So if they forecast that this is going to go down, and especially if they forecast this is going to go down significantly, they want to get out of that trade because the base value of that trade is going to go down significantly too, which means that if they're on margin loans and they've borrowed 4-to-1 money, and then that suddenly crashes down, they could lose all their money. And so this is a dangerous thing for people who have borrowed money from cheaper currencies, and then those currencies are now appreciating. They've got to be very quick sometimes to get out of those trades. And so you could see continued pressure on the US dollar if interest rates are going to come down and come down fast. And this can be a very bad thing for people in the US because prices can go up for everything essentially because the dollar is getting weaker and they're buying things from overseas. But at the same time, if people are then borrowing more money because interest rates are cheaper, this is then creating a double whammy effect for inflation yet again, which is why now it's such a fine line that institutions like the Federal Reserve are walking on in terms of making these decisions. So that's some speculative good news if you're living outside of the US. Though let's get on to the next part here and why I think prices will continue to come down for GPUs and CPU prices. And on that note as well, I've never seen an i7 this cheap in history since the release of an i7. $219. And then if we go to an i9, $330 after a $70 promo discount. That's insane. And also GPUs, I've never seen a 6700 XT brand new under $300. And also in yesterday's video, we talked about the RTX 2080 Super, and I got one for $200 off the used market. People were complaining that prices were in the realm of $400 where they were locally. You can get these GPUs on AliExpress for $239 shipped internationally. So if your local market is a complete ripoff, always look online for better deals. However, those prices aside, I believe things will continue to keep creeping down. And let me explain why. First of all, we got to look at the average person. The average person makes up an economy. If the average person is getting poorer, then things will get cheaper, especially those goods that are aimed at the average person. And here's where we're going back to that 4.8% figure. It's very important. And this number, even then, could be stated as being extremely undervalued, in that it could be a lot higher because they don't account for things like shrinkflation, where that's where you pay the same amount of money and you get less. And we're looking at food. This is especially common at supermarkets. A lot of people notice, hey, I only get 400 grams in my cereal versus 500 grams. So this doesn't even account for shrinkflation. So these numbers could be much higher than 4.8%, meaning that people are getting a lot poorer when we compare that to the average hourly earnings, which has only increased 4.3% over the same period over a year. And the bad thing about this number, as we've said in the past, is it's heavily skewed by higher income earners who are making a lot more in terms of their pay packets increasing versus the average person that may be only even getting in reality a 1 or 2% pay rise. So even just by looking at those two metrics alone, we can see that it's getting tougher for the average person. Then we're going to combine this with the third aspect here, and that is the federal funds rate itself. 5.25%. This is insanely high given the amounts of overall debt in the system, not just the public debt, the federal government debt, but also all debt, which is over $94 trillion. This debt is continuing to grow. And at a higher interest rate, it's going to be continually harder to service. So either two things happen here. And we're actually already starting to see very small signs of this happening on the government level, where the spending's starting to plateau off, meaning the government is not borrowing any more money. And so therefore, they've got to service that debt, which means that there's less money, aka tighter money conditions coming forward. But if we look at all debt, including private sector, that's actually continuing to grow. However, if this continues to grow at a straight linear line, I would actually be somewhat at ease. The risk of hyperinflation wouldn't really be there if this line just continues to go up in a linear fashion. However, if this does plateau off, and especially at 5.25% interest rates, it's going to be heavily deflationary for an economy, meaning cheaper GPU prices will be inevitable. So what we saw there is a trend that in itself would say that GPU and CPU prices are coming down. And unfortunately, a negative side effect, or should I say actually main effect, because it pretty much affects everyone, is that as these inflation numbers are higher than the wage rise increases, and since that I believe is a minimum number, that 4.8%, I believe the true inflation numbers are actually much higher, meaning the misery index would be on the rise much more than we think it is. And I've certainly noticed this with YouTube comment sections in the last 6 months. The amount of negative comments in general is just through the roof. So if we look at retail sales, this is another piece of data that will point to absolutely abysmal sales in the last 6 months especially, where if we look at this line here, this has actually gone flat where things have only opened up more in the last year, travel's freed up, and this number's remained flat. And the surprising thing here is this is actually not inflation adjusted, which means that if we were to adjust this for inflation, this would have actually gone down quite significantly. So sales are down. And then the next graph here we're going to pull up is inventories. The inventories to sales ratio, this has gone up, meaning companies have more inventory, and that trend is on the rise. So they've got currently from April 2023, when they last measured it, about 1.3 months worth of stock on hand. So to sum things up here, as trade goes down and inventories go up, prices go down because people want to offload that inventory. Though now we're going to go on to the last part of the economics portion of today's video, aka the Tech YESonomics portion, and this is the bank term funding program from the Federal Reserve. Basically, people are telling me, Brian, there is stealth QE. The Federal Reserve have made a new credit facility and they're just printing up money and handing it out hand over fist. And that's actually true. They have created a new facility and it is borrowing out a significant amount of money. And although I'll complain about this very shortly, I will say that this money is not reaching the average person like you or I. We cannot get access to these 0.1% discount windows that the Federal Reserve is offering. This is only reserved for institutions like banks, insurance funds, and big credit unions and things like that who have bought these overpriced assets at 0.1% interest rates when they were high, for instance, bonds and treasuries and things like that. And now they've gone down in price and the bank's balances are looking really bad. They can then go to the Federal Reserve and sell them for those higher prices and get this cash injection. That's what that's for. And the unfair thing about this is it's 2008 all over again. It's socialist losses for these too big to fail branches, and it's capitalist gains for them. As opposed to us average folk, it's always been the same. Capitalist gains, capitalist losses. We have to take our losses on the chin. But the sad thing is, relating this back to the average person, when they want to go borrow new money, they can not only not do it at 5.25%, they've got to borrow from an institution that'll put a cut on top. So these 5.25% rates will be more like something close to 7, 8, or even 9%, depending on the loan you're getting. And so this makes it ultimately the cost of borrowing money for the average person is higher than it's ever been in the last 10 years. And so what this means is people on average are going to be borrowing less money, and that means less money being created and thrown out into the economy. So in the meantime, it's basically button the hatches, we're going to bail out our friends, but the average person is going to start losing. And to throw a salty ham sandwich over all the top of that, the banks now require more collateral than they did before, now that interest rates are higher too. Meaning not only is the cost to borrow money a lot more expensive, but it's also harder to borrow that money. That is, if you are not in the too big to fail club. And I do put quotation marks on that because it's all a load of crap. There should never be such thing as too big to fail. If you make bad decisions, you should wear the brunt of those bad decisions. So now with all the economic news out of the way, it's time to relate it back to the most important thing ever, and that is the GPU price. I want cheaper GPUs. Regardless of whether your bananas or eggs cost tenfold, you want to get that cheap GPU, right? I'm just joking, but I love to find a way to tie this economic news back to tech, especially the GPU price. But here's where we go going forward. We're looking at the trends. Unless something major happens and we see a sudden change in reversal from the Federal Reserve and the governments like they did in 2020, where the printers just rolled up in mass, unless we see something like that, and if that happens, I will report on that here at Tech YEScity immediately. But unless something like that happens, we've got conditions in place that are unfavorable for GPU prices and CPU prices, meaning they're going to come down. However, the dangerous thing is here is, for instance, if we look at a 6700 XT, there's very little profit room in that product, meaning there's not a whole lot of wiggle room, especially at $300. Amazon's got to take a cut. There's got to be someone delivering the product, someone boxes it up, someone makes the product. That's $300 for that 6700 XT. It's not going to get a whole lot cheaper than it is now. And going forward, I feel like the deals, if you're looking for the real super good deals, they're actually going to come up on the used market more than the new market. Because believe it or not, a lot of these companies like Intel and AMD and Nvidia, they can get access to cheaper money than you or I can. And so when they get access to cheaper money, they can keep themselves afloat easier than you or I could. So the deals are going to come a lot easier from the used market than the new market, even though the new prices are already looking, or already starting to look, really good. But of course, I do think we will see continued pressure on new prices to come down, especially prices that have wiggle room in terms of profit margins. Now, how much those profit margins are, as we saw before, an i7. I've never seen an i7 this cheap. But what that should tell you about an i7 is that the profit margins were quite high on those products to begin with. Now they're starting to come down. I do believe we could see prices come down even further, especially on CPUs, where there's a lot more profit wiggle room versus GPUs. Though back to GPU prices, and more specifically, new GPU prices, here's where I feel those higher profit margin GPUs, like the RTX 4090, 4080, 4070 Ti, 7900 XT and XTX, will continue to come down in price, especially more so in percentage terms than the lower end stuff, like say a 6700 XT. I do believe at its $300 price point, it cannot come down a whole lot more. Same goes for the 3060, the RX 7600, and even the 4060. I don't believe these cards will come down a whole lot in terms of price. Though if we look at a used RX 6700 XT and all those GPUs I just mentioned, they, I believe, will come down in price, and you could get a really good deal. We're talking maybe even $150 for a 6700 XT in the next few months, providing these economic conditions that we talked about in today's video don't change a whole lot. Anyhow, guys, I hope you enjoyed today's Tech YESonomics video. If you did, then be sure to hit that like button. Also, let us know in the comments section below, what do you think about all the information in today's video? Are there some points you love? Are there some points you disagree with? Love reading those thoughts and opinions, as always, just like this question of the day here, which comes from Tyrone Baloney. And they ask, what's happened to part 2 of the new 12th, 13th gen Intel CPUs having latency issues? Do you really need to make part 2 2 weeks after the first? So to answer that one directly, I am getting information behind the scenes from other people while I make that video, and so it's getting a bit delayed because I want to get the best video done possible for part 2 there. I thought I would have just done my own information, but as that video unfolded, a lot of people were sending me DMs behind the scenes telling me they either had similar experiences or they had tests that I could replicate to show these differences. Anyway, that video will be coming out soon to answer that question directly, and I hope you enjoy it when it does come out. And with all that aside, if you guys enjoyed this one and you want to keep watching the Tech Yes content as soon as it drops, be sure to hit that sub button, ring that bell, and I'll see you next time. Peace out for now. Bye.